Stuart Noakes. I'm the head of tax at Carpenter Box, and so far as yesterday's budget is concerned, from a business tax point of view, there are probably three things that drew my attention. First was corporation tax, and it seems pretty clear that corporation tax is going to be the vehicle to raise some taxes in the future. What we've been told is that the rate is going to go up from 19% to 25%, so that's a 6% increase with effect from April 2023. So it's a couple of years off from now. The 19% rate will continue until then. So corporation tax is going to be the vehicle to raise money from the business community. We are going to see a freezing of rates and allowances for individuals, which you could describe as a sort of an indirect increase in tax. But in the meantime, for those businesses that have suffered losses in recent times, the system is going to be a little more generous for the next couple of years, and those with losses are going to, in very broad terms, be able to carry them back and set them off against profits in the previous 3 years, rather than the 1 year system that we've had in recent times. So, as I say, corporation tax to be one of the big vehicles for increasing tax in the future. So far as trying to encourage investment is concerned, we've seen a few measures that are going to introduce a couple of reliefs in the field of capital allowances. And there is a so-called super deduction for those investing in plant and machinery over the next couple of years, between April 21 and April 23. The super deduction is going to be 130% of the expenditure. You'll get a deduction against your profits for 130% of the expenditure that you incur on plant and machinery. And for certain types of for plant and machinery, there's going to be a deduction of 50%. This is the sort of plant and machinery that might have gone into a special rate pool previously, where the rate of deduction was only 6%. And finally, I'd like to mention the subject of free ports. It seems that the UK is going to designate a number of areas around the country, largely ports on the coast, areas like Solent and Liverpool, Harwich, and so on, designate them as free ports, where not only, in addition to the normal customs arrangements that are associated with free ports, there will be enhanced tax reliefs through the capital allowances system and reliefs from stamp duty for those looking to invest in buildings in those areas. So it'd be interesting to see how they work out in practice, because it's something that's been touted as a benefit of Brexit, the ability for the UK to exploit free ports in sort of more or to a greater effect than they have done previously. So again, I'll be interested to see how that works out in practice. So for me, in summary, three things. We're going to be seeing tax increases in the future through an increase in the rate of corporation tax, opportunity for enhanced tax relief in the short term through the capital allowances system and this so-called super deduction, and finally the introduction of free ports and other tax sites around the UK to stimulate investment in those areas. So that's a few reflections on yesterday's budget from me.